Hello everyone. I want to do a quick audio test. If you can hear me, please press and Y. Let's do a quick audio test and video test. Let's mute. Okay guys, I want to double check that you can hear everything, and we'll get started here. Thank you for joining this webinar. Just realize that this webinar is for educational purposes only, that this is not financial advice, and that past performance is indicative of future results. So please refer to the disclaimer and just realize that trading involves risk. Today we're going to be covering several things, some key elements as far as certain trading strategies. So let's actually start with the trend lines and what a trend line is and how to draw one, and as well as how to trade one. So trend lines, there's kind of some definitions out there, 45-degree angle. Basically, a trend line is just showing you the trend itself. So let's just go through this chart here. We're looking at the Euro USD on the 4-hour perspective. So we have a swing high here, and then we have a swing low right here. So this is just a trend line, and you can realize that here's a high and here's a lower high. What this means is that this market is possibly trending downwards. Now it's broken the trend line, and this doesn't mean that the market has to reverse. Just realize this is just an indicator. Okay, as you can see later down the road, we would have possibly readjusted the trend line like this. So we have a high, and then we have a lower high, and this shows you kind of more of...
The broadcast is now starting. All attendees are in listen-only mode.
And this is kind of showing you on the downward swing, okay, that we're on more of a shallow trend. Okay, so we have a high, then we have a lower high here. And so this is showing you that this is a downward trend. Now, if the market decides to break this trend line and close above it, this is an indication that this market may reverse. It doesn't have to. It may. Okay, that's just this is kind of an indicator that just shows you that we have established high and swing high and a lower high. Now, there's different ways you can pursue in drawing trend lines depending on your brokerage. Now, different brokers offer different feeds depending on the close of the candle of where they're getting their data from. Okay, from what bank or liquidity provider. So let me kind of cover that with you. So some people like to use either the wicks or the bodies. Now some people would consider the wick. I would consider both. I get the feel of the trend line because I've seen so many. So I kind of look at certain trend lines. I kind of like the bodies as well as the wick. So I tend to look at body, wick, body. Now some people just have different ways or theories in pursuing drawing the trend line. So this is an example here. This has not happened, and then we'll actually look at one that has happened. Okay, so here's a high, lower high, and if the market crosses this line, then this may be an indication. Now, like I said, just because it breaks a trend line doesn't mean the market has to reverse. So if it breaks this trend line, that means that this market may not start to trend downwards anymore. This market may continue going in this opposite direction. It may be a reversal. So let's actually look at a previous example of a trend line break and where the market went. Okay, now this example has happened, and so right here, for instance, you can see that here's body, 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 and here was a fake break, right? So, like I said, there's not like this hard rule of how to draw a trend line, but there is ways to kind of perceive it. So here's how I would actually perceive it: is look for a body, wick, and then this strong push off of it. This is what I like, is when it pushes off of it really rapidly, then I feel like that is a pretty decent trend line. Okay, so what I'm looking for in this marketplace is when it broke this trend line, you can see there was a break and a close beyond this price. This is kind of saying that this market is no longer, possibly not trending upwards anymore. Now the market, when you enter the trade here as a sell position, you can see that this market has somewhat of a pretty big retracement, swinging back upwards, right? In theory, the market tends to, when it breaks the trend line, it typically will retest the trend line. Now, if you look at it in more of a more precise way, you can probably see that kind of using this wick as a reference. Now, you can't really get 100% right, but it's about 50% of this candlestick wick. Okay, you can see that there was a body, 50% of this, and then here you can see that the market came back and retested the trend line, acting as resistance when it was support before. Okay, so the market broke. You could enter the trade on the break of the trend line or coming back to resistance, and you can see that this was the reversal pattern here, and you can see the market just climb downwards. Okay, so that's one way you can pursue in trading a trend line. Now, like I said, it's not like this hard rule of 45-degree angle, is it body, 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 or wick, wick, wick. It's more of a feel of how you want to look at the market. So some people, depending on your data, I like to see if there's a strong commitment. Okay, that's kind of how I look at it, is when you see a market condition like this and you see this big bounce off that to me, with that bounce off of it, kind of shows commitment of the confirmation of this trend line. Okay, and you can see that this market, climbs downwards quite a bit. Now, there's another way to pursue trend lines is like this. So we have a swing high, and then we have a lower high. Now, what does this mean? That means the market price is showing signs of weakness. So we have a high, and then we have a lower high. This is an indication that this market may, now this is a past example, reverse or start to trend downwards. Okay, so we do have a high or lower high from here to here. So when it broke the support level, you can see there was a pretty strong commitment there, and here we see the market proceed the downward swing. Now, in a hindsight manner, like I said, there's different ways you can pursue a trend line or trade in the trend. Is find this high and then looking to trade this high, or look to go short here in this general area. Or you can look for a break of support like this. Okay, break of support, and you can see that was a confirmation candlestick right there. Looking for a sell position, and you can see that your general stop loss could be in this general facility. And then you can see right here that like I said, we have to look at it in a hindsight manner. Is we're looking for reasons to trade this trend. Okay, so now the hard part is what is the trend? Because right now we're just focusing on the 4-hour chart. A definition of a trend is just saying it's going one direction for so long. Because you can say it's not trending on the 1 minute or 5 minute or 15 minute or 30 minute. In this case scenario, it is trending downwards on the 4-hour chart. But a trend is just definition of a high and a lower high in a downward trend. Okay, whatever time frame you like to pursue. Some people don't like the 4-hour just because it has a lot more as far as bigger stop losses as well as take profits. Some people like to refer to the smaller time frames, but the concept actually works across the board. The only difference between the bigger time frames is that you're able to project and have a bigger point of view of the market in a longer perspective. Okay, so you can see that we broke support. We have a high and a lower high. We broke support. That was confirmation of a possible downward swing, and we enter the trade right here and possibly just exit the trade right here, thinking that this market may start to reverse in this general area here. Okay, so you could have entered right here. This is an example of the euro dollar, about 150 point trade from here to here. Okay, or you could have exited in this general area if you felt that was, again, a reason to get out. And as you can see, just like I wanted to point out, is just because it broke this trend line, this market really didn't reverse, right? You can see this market just kind of consolidate, and then it started to trend downwards again. So look at this point of view right here. Okay, you can see that we go like this. So here's kind of the stronger trend here. Again, what we could possibly look for as far as trading the trend is look for a reason to look for the commitment on the downward swing. So right here again, we'll support, support, support. Broke the low here, confirmation of the downward swing. Here would be the trend line area, and you can see this market just pursue the downward swing. Now it's pretty extended. There may be reasons for this market to possibly reverse, but that's again, in this case scenario, you could look for a reason to get in as the break of the trend line, or simply look for a double bottom or a lower high or higher high, excuse me. So here, if this is a true low, then we may look for a possible lower high in this general area. That would be an indication that this market is gaining strength, and we may start to trend upwards. Okay, so that's kind of how to perceive the trend line concept. Okay, so let's actually look at support and resistance. Now, support and resistance is actually clean off the chart here. Now, support and resistance isn't an exact price. It's just a general area the market struggles either to break or bounce off of. Okay, so let me just give you an example here. Support is on the bottom. You can think of it as a floor of the market, and then you can look at resistance as the ceiling of the market. So you can see that the market has rejected a certain price. So the market came up very quickly up at this area here, and then it got rejected. And you can see it run up again, got rejected. So this is definitely resistance in this area, and you can see that the market got weak in these general price ranges. Now, like I said, it's a general area. It's not an exact price. Typically, I like body and somewhat in the middle of the wick area. Some people have different rules in drawing support and resistance lines. Some people consider the wicks. Okay, so it's kind of a ding off the price. Now realize that if we kick down on a smaller time frame, this wick is pretty much an engulfing pattern. Okay, let's actually get a good example, or let's actually look at this price itself right there. Okay, so we're looking at this candlestick and how it operates on a smaller level. So I should go like this. So this right here, this information that you see on this this general price that we talked about, this is the wick on the 4-hour chart. Okay, so it swung downwards, consolidated, and then it wicked back upwards. So if you think about this right here, this is actually just a wick of the area. Okay, looking at the 4-hour chart, let's actually kick back up. Okay, so you can see that this right here was pretty much what we saw on the 15-minute chart. It's just a wick. Let me get rid of this here. Okay, so right here, this is the general area that we see that the market swung downward really quickly. So in a smaller time frame perspective, that's the thing, is it's all about point of view. Now, if you look at the 15, someone on the 4-hour chart, when they saw this candlestick close, they may be more interested in buying this currency versus someone that was on the smaller time frame. So let's actually look at the smaller time frame right here. Okay, some people may have perceived the market differently on a smaller time frame. They may have gone like this and thought, okay, it broke my trend line, this market is possibly going to drop downwards. That's just kind of their mentality, right? But again, that's the difference about the time frames. Is some people that like the smaller time frames, they just have to have a quicker reaction time to the market. Now, some people want to perceive it, they're able to, puppy guard the actual market, and they look at these candlesticks constantly. But if you have a really busy schedule, then possibly the bigger time frame will make sense. You may not get as many signals, but you're not going to have to worry about more of these false breaks downwards. Okay, just looking at this again right here, let's actually look at that situation, and it's just to kind of confirm the concepts that we're talking about. Just kind of thinking what people would think on a 4-hour perspective versus a 15-minute chart perspective. So you can see that this market has come downwards really quickly, and then it swung really upwards. It was what we call it, basically a reversal candlestick pattern. Okay, so let's actually look at that on the 15, so you can just see the different point of views. Okay, so like I said, people or traders may have thought that this market was going to perceive the downward swing. Maybe it was because they thought, okay, well, it broke support over here. They're thinking that this thing's going to plummet, because look at this as a hindsight perspective. You can see that there was a break of support here, and you can see that this market really didn't go down very far, and then it actually is a wick on the bigger time frame. Okay, so again, it's just point of view. So some people, they can be in front of their chart all the time, and they're able to benefit from moving their stop loss to +1 or whatever. But here in this perspective, you can see that we swung back above this support level and it broke upwards, and then you can see that it climbed up quite a bit in a smaller time frame perspective, right? So some people thought, okay, well, it's going to drop off. Okay, this is a hindsight perspective. You can see that this was actually a break, a re-break. So this is kind of a false break if you think about it. And then it swung upwards, consolidated, and it broke upwards again like this. Okay, so some people, again, the best way to perceive it is you want to have something that why you're getting in, why you're getting out. So let's actually just talk about support resistance trading on the pound dollar here. Okay, and I'm going to clean off the chart again. Okay, like I said, it's not an exact price. So some people, okay, well, here's support. Okay, here is support right here as well, and then here is support right here. And let's actually look at resistance at the top. So right here, you can see that there is a trade here. Now, what we could possibly, this is the day chart here. So one thing about the day chart, you just have a lot more reaction time, a lot more data to work with as far as direction of the market. Now, some people don't like the day chart because it's too slow. Some people like it because of their schedule. Okay, so let's actually look at this market and see how you could trade it and how we can see the future as well. So as far as this market condition, there were several reasons to get in just using support and resistance. So number one, we saw support here, we saw support here, and then here was resistance. So once the market decided to close or broke above this area, that was an indication that this market may trend upwards. Okay, so we have a low and a higher low, and then when it closed above here, that's saying that it broke this high, and that's the indication that this market is possibly, okay, meaning that this market could, reversed, but in this case, it swung upwards pretty heavily, right? Again, we saw a low right here, slightly lower high here, break of resistance. Seeing that this market has surpassed this price and closed above it, that was a reason to get in and looking for the market to continue this upward swing. So we established a trend line here, right? That's exactly what we accomplished. Now you can see that we broke a trend line, but again, we have this scenario where we have these resistance here on this area here was resistance, resistance. And so when the market closed above this price, that was another reason that this market is possibly going to trend upwards, right? And typically what, it doesn't always have to happen, but you'll see the market conditions where when it breaks the high, typically it will act as support. Now you see resistance, here's a retest is what they call it. Retest engulfing pattern, kind of came back and kind of did a pullback and then continued the upward swing. And you can kind of see this as a double bottom. Here's an area here, slightly lower high, and then we swung back up to the top. Okay, same thing right here. Acted as resistance in this general area. Let's actually go ahead and put this one right here. We'll get rid of these lines here. Okay, this area broke resistance. Now it's just a general area, not an exact price. But you can see that when we broke with a pretty strong candlestick, you can see here is the retest phase that the market shows signs of kind of a bouncing off the support level here. And you can see this candlestick pattern and how it pursued the upward swing. Okay, same thing right here. We broke resistance. And you see that because it's a day chart, you just have a lot more time to react. So you broke this resistance area, came down, bounced off support, and then proceeded the upward swing. Eventually, the market got pretty exhausted as far as pursuing this upward trend. And then what we've done is we've broken a pretty strong trend line here, broke a trend line, swung downwards, and now we're kind of in a phase where this market may either struggle in this general area or even get up to this general area. And again, right here in this general area, it wasn't, the support and resistance area wasn't exact. So some people may have thought, okay, well, I'm going to go short because we saw that red candlestick. But you can see this market kind of consolidate. And it is the holiday here, Labor Day as well. So you can see that there was kind of some confusion in this area, but you can see that we're starting to show signs of bullishness, and we're starting to pursue the upward swing. So you can see that these levels right here, that depending on this market condition, depending if this is a lower high in this perspective, so from this low to this lower high, this market may even perceive the upward swing all the way up to here. Okay, but you can see that we may struggle in this area because it was resistance, support, broke, retest, came down. This is kind of the question mark area as well as right here. So if it breaks this area here, then we can look to trade maybe in this general area. As you can see, it was resistance acting as support. Okay, let's actually cover some moving average strategies. And if you have any questions, please write them down, and then we'll discuss the Q&A section at the end. As well as one thing I forgot about the last webinar is if you have any requests on topics that you want us to cover, please write those down and then also send those emails to Orbex. Thank you. So first off, with moving averages, just to give you some ideas what a moving average is and how it operates. So let's actually go through some moving averages here. I'm just going to pick some random moving averages. I'll just do a 13, and then I'll do, let's actually change the color here. And you can, this is how you do it. You just go to properties, and we'll just have the smaller moving average with a slightly lower line here. You can change the levels and visualization, so if you only want it on certain time frames, you can make those edits. So 13 moving average, and then let's actually do, let's see here, moving average. Let's do a blue 62. So let's do a blue. And what this means is it's basing on closes in this case scenario. And so we have a 13 moving average. What that means is we're taking 13 of these candlesticks, and we're using the average close to come up with this average. Now realize moving averages, they do lag, okay? So this is kind of, you'll see that if you stare at a chart long enough, you'll see that this market going up and downwards, and you'll see that this thing will readjust up and down, okay? So the idea of a moving average is if the market is trading above the average, that the market is, that's just an indication that this market may trend upwards, okay? So like we talked about trends, is what is the definition of a trend? Now there's different definitions. So here we can see that, yeah, it is overall trending on the 13 moving average, but it may not be trending on the 62 moving average. Now it's the same concept with 62 moving averages. You're using 62 of these candlesticks to come up with this number. Now with this bigger average, you're really actually projecting bigger trends. Okay, let's actually kind of squeeze the chart so I can give you a better idea of that. You can see that, so the smaller trends, you can see the more immediate trends is the 13 moving average, but as the 62 moving average, you can see that we're actually looking at in a bigger perspective. You'll see that when it really trends heavily like this, okay, we can see that there is, on a short-term level, you can see it was kind of choppy through the moving average of the 13. In this case scenario, with this, market condition, you can see that this 62 moving average was actually a stronger trend, right? Okay, so you can see that it's kind of the same thing with the time frames. Is the bigger the average, the bigger the projections that you can look for. Okay, so you can see that here we have the smaller trend of the 13 moving average. But you can see the 62 moving average was actually projecting a lot more than the 13 moving average. So let's actually talk about some strategies with the averages, and just realize, this is something that you want to test and make sure that you can understand and use. So again, with the moving averages, the idea is just basically understanding that if it's above the average, then you're possibly looking for buy opportunities. If it's below the average, then we're possibly looking for sell opportunities. Now, when the price closes below this average, that's kind of the indication, or like kind of a crossover. That is a reason to possibly go short. As well as once it crosses the average on the other side, then this is a reason to buy this actual currency. Okay. So when the market crosses this 13 moving average, or crosses these two averages, this 62 and 13 moving average, that could be your reason to get in as a buy situation. You could possibly put your stop loss behind the swing low or below the average, saying that this market, if it is truly on an upward trend, then the market may have this upward swing. Okay, and then we can refer to using the 62 moving average as our exit strategy. So you can look at the 13 moving average as your entry strategy. Okay, you can enter right here, or you can look to close out, or your exit strategy could be the close beyond this average right here, or simply the close below the 62 moving average. And you can see that, again, it kind of whipsaws right around here, but when it recommitted on the upper swing, okay, so we can actually enter the trade on the break at the 13 moving average. You can use this as your stop loss as below the 62 moving average. And you can see that this case scenario, this is just an example, that we had a pretty good, market projection. Now this is the 4-hour perspective. So you enter the trade right here, you might have got out either here or right here, which is about 600 pips or so. Okay, so obviously, depending on the market conditions, you could see that this could be a great strategy. But if the market is in a consolidation phase, like right here, you can see it's really choppy, then this strategy is going to be kind of tough to trade with. Okay, but if you can see that if you're able to project some stronger trends here, so for instance right here, just like we talked about, let's say we either enter the trade on the crossover or the break of both these averages right here as your sell position here, you can see that this projection was actually pretty far as entering right here and then exiting on the cross of the blue moving average, which was from here to here, which is about 294 points. Now this is an example. Obviously different currency pairs have different volatilities, so you want to test it out and make sure that it's a pair that you like and you can handle the volatility of that. Okay, but let's actually talk about creating your own trading system. Now creating a system is basically about testing. So let's actually look at the pound yen here, okay, and this thing moves. So if you like something that does move really quickly and moves very aggressively, then the pound yen is something that you may like. But if you're looking for slower pairs, then you're probably looking for something that's based on the euro dollar or the any dollar pair in all reality. So looking at the pound yen, and just to give you perspective here of this currency, so there was a break of a trend line, there was an entry right there, and this is on the 1-hour chart. So this thing moved about 100 pips from just a day or so. Okay, so it's a pretty quick moving pair. But let's actually talk about some trading systems that you can create. Let's actually look at some other indicators here. Let's actually look at the input section here. Actually, let's actually look at, oh yeah, input, okay. Now some of you may have, certain indicators that you like, something that you just have reasons to get in the market. But I'm just going to give you some ideas as far as a trading system. Number one, trading systems should be simple, easy to understand. The defects as far as why you're going to lose and why you're going to win. Okay, so this is just a stochastic on the 30-10-10 setting. Basically, the idea of a stoch is overbought, oversold, or supply and demand. If it gets in the 20-0 zone, that's typically saying it's oversold. And when the cross of the moving average are below, a recommitment above this area here is an indication that this market may continue the upper swing, where the recommitment actually started right here, as you can see in comparison price. Here we see that it was overbought and there was a cross right here. This is a reason that the market did sell off. So some of you may have certain strategies. So let's say that it is in an oversold scenario, but you're looking for confirmation on the upper swing as a trendline break. So right here, when it crossed right here, maybe you're looking for the break and close above the trend line that this market is going to swing upwards here. And so once this market closed above this area, then that might be your entry. You may have an exit strategy below this area or below this last swing low, or whatever you want to consider. And then here's your exit strategy. Once it gets in the 100 or 80 and 100 zone, then that might be the reason why you want to get out, because it's overbought. Okay, so if you enter right here, we just talked about that as 98 pips. Now this strategy itself may not work across the board on all currency pairs, because it depends on how volatile the currency is. Some currencies like to trend harder than others. So this strategy, because this is taking highs and lows, basically it's going to work better, not in a trend scenario, but more in a consolidation type of market. Okay, so just right here, overbought, it did sell off really quickly, but here when it was oversold, almost oversold, then here was your buy scenario. So you might have wanted to take the trade either when the cross happened or simply looking for a break of resistance. Okay, so when it broke resistance swinging upwards, that could have been your entry point. You can see that you would have benefited there and maybe protect your position on the way up. So some people may, again, you want to test this out. You want to have reasons that you're getting in, and then write reasons why you may lose. You want to look at the good and bad, and why you're going to lose on the trade, or what you're willing to risk in order for you to know the pros and cons of the situation. Okay, so right here again, this is an example. Here the market did get into the overbought scenario, and then we had a scenario where the market did, you could have got in based on the cross because it is overbought, or you were looking for maybe a close beyond a certain price as a confirmation. Okay, and then you can see that this market did get into the oversold, and that's probably an area that you want to get out, maybe 120 points or so, and that's your exit strategy is based on getting out in this area where it's overextended. Okay, so that's kind of the idea, is you want to have reasons why you got in, why you're getting out, what your risk is in the trade, where your stop loss level's at. Some people do trade with no stop losses, but you have to understand the pros and cons of that. When you don't trade with stop losses, you're actually risking the whole account. Whereas if you do have stop loss rules, then you're willing to risk X amount of dollars to possibly gain, Y. So whatever you're risking as X, then your results as Y to be your outcome. So again, with the idea of this trading system that you may develop on your own, then you may see that again, depending on your schedule, you may like it, you may not. Again, you want to see what kind of market conditions you're up against. So right again, with this pair, you can see it was consolidating with the pound dollar here, okay, like this. In all reality, with this kind of market condition, you may have traded on a smaller time frame. Okay, because the overbought, oversold idea is very simple, and you can see that if it was on a smaller time frame, this was the oversold, and you can see that we could have looked at it across, and then here we look to sell, and then buy, sell, buy, okay, and so on and so forth. Okay, so let's actually talk about leading currencies and how that operates. Now, we'll have the pound dollar here. Let's actually clean this off here. And let's do a pound something else. Pound chef. Okay, so what we talk about, or what the idea of leading currency or strength, because all you're really determining is the pound getting stronger or is the other currency getting stronger. Let's actually look at all of these on the 1 hour perspective. Okay, let's actually clean this off. Okay, so this is called the leading pair here. So we have the pound on the very first of each of these pairs. Okay, so if the pound is actually getting really influenced, let's say that the banks are driving the markets on, for instance, there was a time where Greece was struggling financially, you probably saw the pound just completely just drop off the map, okay, and then they got bailed out. So you see that when everything that was trading against the pound, everything was dropping. Okay, in this case, you can see that the pound was gaining strength. So let's actually look at all the pairs. See, there was kind of strength there, okay. So basically, your decision is based on saying, okay, if the pound is really getting influence on either on an economic level or looking at your fundamentals, you can say, what is the pound doing? If you're trading the pound, typically they'll actually all follow each other. So this is just an example. Once you'll see that maybe possibly on resistance of the pound, on the pound shaft, when it broke, then you possibly will see the same thing happen on the other pairs. They typically will follow each other. So this was kind of a slower break in this area here, like so. So resistance, and this is tied to the dollar, so it's not as quick. It's not an exotic. So here we could have entered the trade. And this, if the pound is definitely influenced by these pairs here, then this market is possibly going to continue the upper swing. Now I'm kicking up to the day chart. This market may continue going upwards. Who knows? Okay, but I'm just kind of just breaking it down based on strength and weakness. So let's say that the pound was really influenced. That means that the market may continue going upwards. This one's when it broke resistance. Definitely the pound was influencing the pound in the shaft, and the shaft may just be specifically just gaining a lot of strength, or yes, gaining a lot of strength with the pound, and the pound was just overcoming that. The pound was actually gaining a lot more strength than the shaft, or the shaft was actually losing a lot more value against all the pairs. Okay, so basically, let's actually look at what the shaft was doing on these pairs here. Let's see, looking at the USD Swiss franc on the 1 hour perspective here. Yeah, so you can see that anything that was trading against the shaft, you can see that that was actually pursuing the upper swing about generally the same price, or generally the same time that this the USD Swiss franc against US or the pound shaft. You can see that those market movements were pretty similar. Okay, so you'll see that one currency may have just a massive amounts of influence in the market, and that's what's driving the market. So the pound here, you can see that when it broke this level of resistance, when it broke this resistance, there was a lot of influence by the pound on that market movement, as well as here is kind of just not as aggressive, but here with the other pound, you can see that that's kind of moving that way. Now the interesting thing here, just to give you that idea, let's look at the euro dollar and the Swiss franc on the 4 hour perspective. I'm just going to clean this off. Look at this market pattern, and then let's actually look at let's actually clean this off here. You'll see that the euro dollar, or the dollar on this case scenario, is on the end, and this one is at the beginning. Now, it doesn't always have to end up this way, but the idea is that when this one is going downwards, typically this one does the exact opposite. It's kind of a mirror. Okay, so look at this again. When it broke this support level here on the euro dollar, you can see that this market trended downwards pretty heavily. In this case scenario, it broke resistance and the market went the upward swing. Okay, so that's kind of the idea of understanding the strength and weakness of the currencies and how to trade it. Okay, does anybody have any questions here? Let's actually look at some questions that some people may have, and if you want to type those in there. And also, just a reminder, make sure that you understand you can pick your topics and refer them. Certain information that I can and can't cover, so we'll review the your requests on topics, and then we'll go from there. All right, looks like we let's see. I'm going to double check here. I'm not seeing any questions, so it looks like that we covered quite a bit today. If you have any questions, or I believe that we have this webinar recorded, please refer to the staff. If you have any other questions, I hope you guys have a wonderful Labor Day, and it looks like we don't have any questions, so I hope you guys enjoy this webinar, and we'll see you next time. All right, guys, take care.